start record. There we go. All right. In progress. Okay, guys, are you guys not gonna tell me how your weekend was? You guys really not gonna tell me how your weekend was? I'm getting upset now. I'm getting upset. Let me show you how I look. If you guys are not gonna tell me how your weekend was, I'm gonna show you how I look right now. That's how I look right now. If you guys are not gonna tell me how the weekend was, if you're not gonna tell me how your week, that's how I look. I was working the weekend wet and cold in Cape Town, but still blessed. That's beautiful. That's super awesome, Miss KG. I was, I know. That's how my weekend was. No, I'm sorry, Tando. I'm sorry. I hope it will be better. If your weekend looked like me, how I look there, that's not good. All right. So, yeah, guys, let's get on to the business of the day. Please just make sure that your mic is muted. I hear dogs barking. Graham, I believe that's Graham. We can hear your bulldog. The the weekend was quiet. At least it was not like Graham's bulldog. If your weekend was quiet, it was not like Graham's bulldog. All right, guys. Let's go. Before we begin with today's session, someone says, Isaac Easy, you are fire. I cannot wait for this week. Fruitful sessions last week was amazing. Land alone. May God bless you in abundance. Amen, Leandra. Thank you so much for such kind words. Thank you so much. Thank you so much. I really appreciate it. Thank you so much. All right, let's get on to the business of the day. Before we proceed, I just want to say a disclaimer that any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. The market observations and insights provided are based on current data and trends that are for informational purposes only. They do not constitute financial advice, recommendation, or endorsement of any kind. Trading and investing involve inherent risk. You should consult with a licensed financial advisor to evaluate the suitability of any strategy, trading, or investment decision based on your individual financial situation. Now that we've gotten that out of the way, let us get on to the business of the day. And again, at the end of this session, guys, we have really exciting news, and I didn't even tell the team as yet. The team is here. We now have a leverage of 1:2,000. 1:2,000. So you have 100% deposit bonus as well as a leverage of 1:2,000. That means you can trade with little money and still be able to open significant trades. Isn't that amazing? You can take advantage of the 1:2,000. Fund your account right now with ATY Markets. All right. And at the end of the session, as I said, I'll give you guys 100% deposit bonus for any amount that you fund your trading account with. And at the end of the session, you'll also receive a video in the Telegram channel of this session so you can refer back and study at your own time. Guys, isn't that amazing? Write in the comment section and say ATY to the world. Write in the comment section ATY to the world with some fire emojis. 1:2,000 leverage, guys. Isn't that amazing? I want to see ATY to the world in the comment section with fire emojis, with dollar emojis. I want to see all of that right now, guys. Fire emojis, dollar emojis, and ATY to the world. ATY to the world. 1:2. That is exciting, guys. That is exciting. ATY to the world. Sally, I want to see some fire emojis. I want to see some fire emojis. ATY to the world. All right. For those of you who are joining, do we have any first-time visitors here? Do we have any first-time? ATY to the world, baby. ATY to the world. Super, super excited. Do we have any first-time people here? If you are new, if it's your first time with us, if you are new, if it's your first time with us, let me know in the comment section and say, easy, this is my first time with you guys. Oh man, ATY to the world. ATY to the world. ATY to the world. That's amazing. My name is Isaac Easy. I'm a graduate of business management and entrepreneurship, as well as a graduate in business principles and practices, a graduate in certified sales with Meseta. Guys, I am Leonard. Okay, I didn't drop out of matric. Okay. So I am Leonard. Although I use the CPF method, cram, pass and forget, Oksalayo, I am Leonard. As long as I have the qualification, whether I crammed and I forgot, that has nothing to do with you, okay? Don't be jealous of me, okay? And over and above that, I am a professional Forex trader with over 10 years of experience. And I am the founder of Flexi Forex Trading College, and we've trained over 10,000 students over the years, and we've held over 300 Forex seminars throughout the Southern African region. And my passion is really to just I see someone is okay. My passion is really just to teach people about the Forex market. My passion is really just to empower people with knowledge. I'm sure you guys can attest that I'm so passionate about, teaching and imparting knowledge. Gladwin, you are welcome to the team. We are happy to have you in today's team. So yes, guys, that is who I am. For those of you who don't know me, now that I've introduced for sure, you're a Leonard human. Absolutely. Leonard, very Leonard human being. They should call me Dr. Easy. You guys should call me Dr. Easy today. All right. I am here to give you guys a prescription. I'm here to give you guys a prescription today. Call me Dr. Easy. All right. Okay, guys, so today what are we talking about? We're going to talk about how to analyze the Forex market. We're going to talk about introduction to fundamental analysis, introduction to technical analysis. We're going to talk about market trends and chart patterns. All right, really, this is for just to give you a foundational understanding of how to analyze the market. I know I've been teaching you more about what Forex is. All right, but then today we are taking it a step forward, a step up, a level up, and we say, okay, now that I understand what Forex trading is, I see all of these graphs, I see so many things, but I want to understand what is the idea behind that. I've taught you guys about candlesticks, I've taught you guys about all of these things, but now I want to bring it together into, something a practical thing that you can start doing for yourself as well. Is anybody excited for that? Is anybody excited for that? Let me see if you're excited in the comment section. I love you guys. I love it when you guys engage with me. Let's say Isaac Easy, we're excited for that. So today you are going to learn how to analyze the market. You're going to learn how to read the market. When you see the charts, you are really going to learn. When you see certain things, now you're going to know, okay, this is what this means, and this is what I need to do in order for me to be profitable or not. Yes, Doc. Cindy says, yes, Doc. Dr. Easy in the building. I am here today to prescribe the right medicine for you so you are able to analyze the market, guys. All right, let's get on to it. What is Forex analysis? All right. What is Forex analysis? Forex analysis is used by retail Forex day traders or even long-term traders to determine to buy or sell decisions on currency pairs. The English was really bad. But Forex analysis is used by retail Forex traders to determine where to buy or where to sell on currency pairs or instruments that are traded in the market. It's really analysis is what helps you to make a decision on whether you're going to buy or you're going to sell in the market. That's what we mean when we say analyzing the market. All right. Forex analysis is legit just analyzing, or rather just reading data to help you to determine whether you're going to buy or you are going to sell. That's what we mean when we say Forex analysis. All right. Now, there are two types of Forex analysis. Two types of analysis. It's actually three, all right, but we're gonna talk mainly about the most common ones, because the third one is really for professionals, all right. But today we are really going to discuss the two common ones, which is the fundamental analysis and the technical analysis. Write in the comment section fundamentals and technicals. All right. So we'll start on my left. We'll start with fundamental analysis. Fundamental analysis includes fundamental analysis of macro data. All right. It includes the analysis of macro data. This includes monetary policies. It includes foreign exchange policies, capital flow policies, monetary policies, our financial policies, financial conditions, and so forth. All right. We also, in fundamental analysis, we also study industry analysis. So that means we analyze the industries. All right. It's energy, material, industrial, utilities, healthcare, financials, consumer staples, IT, communication services, real estate, and so forth. So fundamental analysis encompasses all of these things. There's also fundamental analysis of stocks. All right. In simple terms, fundamental analysis is really just reading the news and understanding what is going on in the markets or in the economy. That's what fundamental analysis. We also have technical analysis. What is technical analysis? Now, this is the most common analysis amongst retail traders, is the analysis of the graph analysis. All right, analyzing the charts on your MetaTrader 5 or on your ATY markets platform. All right, we analyze price action, we analyze the graphs, we read those graphs, and they tell us. From there, we analyze the patterns, and they tell us the decision. So basically what happens with the graphs, and I did explain to you, is that what we see on the graph is just information or news that is then transformed or translated into images that we can read. And those images, they create certain patterns in order for us to make an informed decision. Now, it's important that you understand the patterns that are being translated into these graphs so you can make a better decision. Today, we're going to touch a bit on the foundation of all of that. In technical analysis, we analyze the graph. All right, price action, candlestick patterns. Last week we touched a bit on candlestick patterns. It was an amazing session. Today we're gonna chat a bit about trends and patterns and so forth. We also have what we call indicator analysis. Not really my favorite type of analysis, but it also forms part of technical analysis. All right. We also have what we call volume analysis. All right, that forms part of technical analysis. Also not my favorite. I prefer my graphic analysis, really just analyzing the candlesticks. I'm friends with the candlestick, and that's what I prefer to do. Are you guys with me? Do you understand the two types of analysis that we have? Fundamental analysis, which is news, understanding the news, the policies, and then technical analysis, that's where we analyze the graphic analysis, analyzing the charts. So we're going to dive deeper into that. So introduction to fundamental analysis. Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency pairs. All right. Introduction to fundamental analysis. intro. Guys, this is, you guys have heard about us talking about NFP, CPI. This is what fundamental analysis is, all right? Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. Is really, in simple terms, just looking at the news, all right? So we look at things like currency rates, all right? The basic instruments of the foreign exchange market are affected by major financial news, fundamental statistical reports, and geopolitical events. And some of this, where do we get most of this information? I have written down the most popular Forex news websites where you can get news about the Forex market. The first one, of course, being the best in the world, atymarkets.com. You can get the news on the atymarkets.com website. All right. We also have the most popular one, which is called investing.com. We also have Bloomberg, and we also have Forex Factory. These are not the only ones. There are many out there, but these are just the most popular ones that a lot of traders use. All right. As I said, fundamental analysis is just a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. Do you guys have any questions before we move forward? Is there any questions? All right. Do we all understand what fundamental analysis is? Yes, understand. Okay, great. Let's move on to the next one. Now, on the other session, I forgot to mention all of this for you. Remember when we spoke about the participants in the market, we spoke about major central banks. And today I just want to give you an example of who those banks are, all right? Can you blend fundamental with pure price action? Absolutely. Remember, as I said, what price action is translating events that are happening in the market and just bringing them in graphic form. All right, those graphs are not just moving by themselves. There is real life information that is happening behind the scene that is also affected by a lot of, even fundamentals is also translated into the candlesticks. All right, you are able to blend the two. All right. So the 8 major central banks will include the Australia Reserve Bank, or the Bank of Australia. All right. In Canada, we have the Bank of Canada, which is known as the BOC. All right. European Union, we have the European Central Bank, the ECB, and then we also have the BOJ, which is the Bank of Japan. We have the Reserve Bank of New Zealand. We have the Swiss National Bank, the SNB. We have the Bank of England, the BOE, and we also have the Federal Reserve System. That's what we call the Fed. You'll often hear people, especially market analysts, talking about the Fed and so forth. This is the Federal Reserve System. All right, this is the major central banks in the world. These are the big players. All right. So as we are analyzing this information through fundamental analysis, these are the key players in this, in fundamental analysis, or even in the market in general. Are you guys with me? Okay, these are the guys that make you blow your account in NFP, or they make you make a lot of money. I'm super excited about that. When is the next high impact news coming? On Wednesday. What is it? Core retail. Okay, we have core retail coming this coming Wednesday. Guys, imagine trading that with a 1:2,000 leverage. I'm telling you that, you can easily take $100 to, I don't know, maybe $500 to $1,000 if you catch the move right, and if it moves the way it's supposed to move. Or you can easily blow that $100 within a few seconds, all right? But now, because you are under the guidance of Dr. Easy, I'm going to prescribe the right medication for you guys. Are we together on that one? Who's excited? Who wants to trade CPI with us? I think we're going to have a live trading session with the team. It's going to be exciting. So who's going to be trading CPI with us? Make sure that your account is funded with the 1:2,000 leverage, and let's get to make some money. Even if you double your account in that day, that would be amazing. Who can give you 100% return in one day? That is amazing. That is good money. But also, it can also go the other way. You can also be 100% down, but that's just the nature of the market. The beautiful thing about the market is it's not about whether you are right or wrong. It's about how much you make when you are right and how much you protect when you are wrong. That is what makes professional traders. All right. How to use fundamental analysis in trading. This is how you use fundamental analysis in trading, or how to trade the news. All right, and we're going to be applying this on Wednesday. All right, number one is you look out for the events of the week or of the day. So usually what we do on Sundays, we'll open up the economic calendar, and I'll show you guys just now. We'll open it up and just see what high impact news are happening in this week, and then we mark those dates, so we know that on this day there is probably a high impact news that we will be trading. All right, focus should be on high impact news. Why high impact news? Because they are the ones that bring volatility in the market. So we have low impact news, we have medium impact news, we also have high impact news. Our focus is on high impact news because they are the ones that move the market. The low and the medium don't really move the market that much, but that doesn't mean they are not important. Just that the high impact news are the ones that bring in too much liquidity into the market at the same time, because a lot of traders are in the market in that particular time, and decisions are made that cause the markets to move a lot. All right, or reports are released that cause the market to move a lot in that particular time. All right, for some of you, you would have seen that with NFP, the market really can go so many pips up or down within a matter of seconds. That means you can also make that much money within a matter of seconds. All right. Number three, we confirm the release time and understand the meaning of the event and the possible outcome. Every high impact news has a possible outcome on a particular currency pair or a particular currency or stock. All right. Mostly we focus on the high impact news that include the United States dollar. All right, we trade mainly because those are the most volatile one. That doesn't mean that other currencies don't have high impact news. It's just that it's a common thing amongst traders that we trade high impact news that include or are based on the United States dollar. All right. So we confirm the time and we understand the meaning, and we understand whether if the report is positive, what that means for the dollar, and if it's negative, what that means for the dollar, so that we can also make an informed decision, also using technical analysis. All right, you take note of the previous and the focus. So you take note of the previous news. Look at what the previous report was, what it meant, what it is, and also look at what the forecast is. Because as I said, once we understand that the meaning of the event, and there's also what we call a focus. When the focus is being set, if the report is lower than the focus, that is a negative impact on the dollar. And if the report, the current report or the actual report is higher than the forecast, that means that is a positive for the dollar. That means the dollar will gain in strength. All right, and that can help you to make money or lose money if you're wrong. All right, then we wait for the news release, okay, so we can get that information, and we combine that with technical analysis and strategies to make an informed decision. Many people will ask you, how did you guys know that it's going to buy or it's going to sell? This is a combination of understanding the market and also technical analysis, because as I said, those graphs really are translated information, and they can give you an edge into the market to make an informed decision. All right, so don't just look at the news only. We still need to apply technical analysis and strategies in order for us to make an informed decision. We don't only rely on the news, we rely heavily on technical analysis, and that's what we are going to get into right now. All right, practice. Guys, I always love for us to do practices so you guys can understand. So what I am going to do now is I am going to open a new tab, a new new window. Okay, let's do a new window there, and then we are going to go to the most common one, investing.com. This is the one that I would recommend after ATY markets. This is the one that I would recommend, of course. All right, so here it's really just about financial market news. It gives you a whole lot of information as you go in there. You can see markets, shares, commodities, currencies, ETFs, bonds, funds, currents, cryptocurrency, and so forth. It shows you the South African top 40 composite, the Dow Jones, S&P. There's everything that you need to know about the markets. You can get it here. All right, it shows you the calendar over there, but what we just do is you just go investing.com, you register your account. It's free, absolutely free. Mine is already registered. As you can see, my name is over there, and you go. This is the most important tab for us, economic calendar. This is the most important step for us, economic calendar. It's the most important tab for us. And as you can see over here, it shows me the economic calendar. It will show you holidays, earnings, dividends, and so forth. Our focus is on economic calendar. As you can see over, it will show you yesterday, today, tomorrow, this week, next week. You can even see previous data over there. You can even make custom dates. You can choose a month. Even next year from now, you are able to check on what day, what is happening. All right. And today we can see here that we have, there isn't much it's holidays here. All right, there isn't much going on over here. All right, and then let's go to tomorrow. All right, tomorrow we can see that we have 3 stars here. Which 3 stars? It stands for high volatility. It's high impact news. All right, so we can see that we on the dollar, as I said, we focused, and you can also, let me just filter this to the United States. The United States of America. Where do I clear all? All right, and I'm going to select, you can filter it. I'm going to select the United States of America, and I apply. All right, so it will show me the high impact news that are happening in the United States. 2:30 we have core retail sales. All right, again at 2:30 we have, that's the one that I was speaking about. You can see we have a previous which shows a 0.3%. A focus is a 0.4. So if the actual is 0.4 or 0.5, the dollar will be strong. But if it's 0.3 and going downwards, the report that comes out tomorrow, that means that the dollar will weaken. So that means we sell the dollar. All right. Same thing over here, crude oil investments at 4:30. Inventories at 4:30, and the Powell speaks at 19:15. All right, whenever this guy speaks, his hello is the most expensive hello in the world. All right. This guy's hello, as soon as he says hello, the whole financial market shakes, or good evening. His good evening is the most expensive good evening in the world, because it can either turn people rich or it can make people broke just by him saying good evening. All right, so he will be speaking tomorrow as well, so be on the lookout for that. And yeah, guys, so that's really just what we look at when we check in fundamental news. That's really just what we look at. All right, do we have any where is my okay, I'm gonna close that. All right, do we have any questions pertaining to fundamental analysis? Is there something that you don't understand that you would love to learn more? Is there something that you'd love to learn more, or that you'd love to understand before we move on? Right, I don't see any questions, so we're going to move on. Introduction to technical analysis. My favorite. Gladwin says all good. That's good. Introduction to technical analysis. All right. understand. Tanda says we understand. That's great. So we understanding. Good. We can move on. So we spoke about fundamental analysis. Now we are getting to technical analysis. Just a basic understanding of what technical analysis is, and this is the most common type of Forex analysis. All right. Technical analysis is a study of historical price action in order to identify patterns and determine probabilities of the future direction of price. I'll say that again. It's the study of historical price action in order to identify patterns and determine probabilities of future direction of price. All right. Technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price could act in the same way that it did before. In technical analysis, we all have this belief that history will repeat itself. What has happened before will happen again. That's why we use historical data to predict future movements. Does that make sense? If you understand, if you have that clear understanding that a common belief amongst Forex traders is that there is nothing new under the sun. Whatever has happened will happen again. So we use what happened before to say this is what might happen in the future, believing that what has happened in the market will definitely happen again. So that's why we use historical data to make future predictions. All right. Are you guys with me? And I use the word prediction just for understandability, but really the exact word is really to speculate. All right. Are you guys with me? Because we're not just predicting based on a hunch, but it's based on informed decisions. All right. We informed information. All right. Like previous year to date. Absolutely. That's what we do. That's what we do. We literally just look at history and then we identify patterns that have happened before and that are happening currently. And we know that if a certain pattern has happened before and we see it forming again, there is a likely that the same outcome will happen again. So in technical analysis, it involves the use of trends. We understand that we spoke about trends the other day, that there are 3 types of trend. We'll get into more details on that. We look at things like support and resistance. Some look at things like supply and demand and so forth. There's really just a lot of things. All right. This is just basic understanding of what Forex trading is. As we get into more advanced courses and sessions, you will start understanding what some of these things are. We look at indicators. That's why I said I don't really use indicators myself, but I know people that use them and they work for them. We look at chart patterns. All right. I don't know if we spoke about chart patterns. No, we didn't, but we also looked at candlestick patterns. We did touch on candlestick patterns, and I remember one of you even changed his name to Marubozu. All right, where's Marubozu? Marubozu, where are you? You guys remember he changed? You guys remember the Marubozu, the dojis, the 3 white soldiers, the 3 black crows? You guys remember all of that in one of our sessions teaching about candlesticks, and one of you guys changed. I don't see him today. Marubozu is not here today. All right. So yes, guys, so in technical analysis, we really just look at trends, support, resistance, supply, demand. We look at indicate. There are many things that we look at. All right. This is just the basic understanding or the foundational concept of technical analysis. We look at chart patterns, candlestick. There are so many things. There's things like Fibonacci. There's other concepts that came out. Smart money concept. They talk about order blocks. They talk about fair value gaps and all of these things that they're just attempting to speak, to explain how the market moves. But we really just use these tools. Now, this is the most important aspect of today's session. If you have this understanding, everything else that you will learn about technical analysis falls into this foundation. This is like the building foundation where everything else that comes has to be built on these core principles. Are you guys ready? Take a screenshot, write this down, remember it, All right, this is what we call the 6 tenets of the Dow theory, or the Dow theory, depending on your pronunciation. The 6 tenets of the Dow theory. All right, the Dow theory is the common ancestor to most principles of modern technical analysis and the general line of trend analysis. All right, there are 6 principles that will be applied to the Dow theory portfolios, and these are the 6 principles. Principle number 1, the market discounts everything. All right, that's principle number 1. The market discounts everything. What do we mean by this? Is that for every either buying or selling movement that the market does, there will always be a discount. So that means the market will not just continue going up. There will always be if the market is going up, there will be a discount to the down. Always there will be a discount to the downside before the market continues going up again, and that's what forms the trends that we see. And if the market is selling, there will always be a discount that pushes the market up again just a bit before the market continues going down again. The market discounts everything. Write it in the comment section. The market discounts everything. All right. Number 2 principle is that there are 3 types of market trends. 3 types of market trends. Trend number 1, we'll get into it, is uptrend, downtrend, and sideways trend. We touched a bit on it in our previous session, but we're going to get into more details as we go. There are really just a lot. That alone is a session that can take us 2 hours to dissect. All right, just understanding the trends and what makes a trend. There is internal structure, external structure. There are so many things. There's price also included in that. All right, but this is the core. Principle that the market. There are 3 types of market trends. All right. Number 3, primary trends are split into 3 phases. Primary trends, which is the uptrend and the downtrend, they are split into 3 phases. And as I said, this is the foundational rule or principle. As you become an expert, you'll understand that more phases have come into the market, but they are built on this principle. They are built on this principle that every trend is split into 3 phases, and we're gonna get into it. All right. You spoke about 3 markets last week. Yes, that's the what you call sorry about that, guys. Sorry about that, guys. I just got distracted a bit. Sorry about that. Please just give me 1 minute. I apologize. Oh, Lord Jesus. Okay, I am back. Say welcome back, Dr. Easy. Say welcome back, Dr. Easy. All right. Primary trends are split into 3 phases. Now hear me and understand. This is the core foundation. As I said, as you begin to learn, you'll understand that more things have been introduced in this core foundation, and there are other things that have been added, but the foundation is this. Even though they still add more things, their foundation is still this. The primary trends are split into 3 phases. All right. Indices must confirm with each other. We'll get into more details about this one. We're not going to touch too much on it. Volume should confirm price. Not going to touch too much on those. All right. Trends persist until there is a clear reversal. Now, the most important 4 ones you need to focus on for now as a beginner. Not that the other 2 are not important. I just don't want to confuse you a lot. All right. The market discounts everything. If you understand that, you will always have a better edge in the market. There are 3 types of market trends. understand that you'll have a better edge in the market. Primary trends are split into 3 phases. You understand that you will have a better understanding of the market. Trends persist until there is a clear reversal. You will have a better understanding of the market, and that will help you to become more profitable. Are you guys with me? All right, let's move on. Let us move on. All right, guys, just give me 1 minute. One minute. Just give me 1 minute. Management. Okay. All right. Now, 3 types of market trends. We spoke about it the other day, and this is just an example. All right. We have an uptrend, we have a sideways trend, and we have a downtrend. What are the characteristics of an uptrend? We have what we call higher highs, and then we have what we call higher lows. We have lows, we have highs in the market. So that means the market was low, then it went high, low again, it went high, low again, it went high. I'm going to do a session based off this, but just for foundational information, when the market moves, it doesn't move in a straight line. It moves in a zigzag movement, and I'm sure you've seen that on the charts. And this explains what I said, that the market always discounts everything. So the market was low, it shot up, created a higher high. Why do we call it a higher high? It is a high because it is lower than this. It is higher than this low. All right, and the market discounts, and then we have a higher low. Why do we call it a higher low? It's because as much as it is a low, it is higher than the previous low. All right, this one, as much as it is an high, it is higher than the previous high. All right, so that's why we don't just call it a high, it's a higher high. That means it's higher than the previous high. This one, it's a higher low. It is still a low, but it is higher than the previous low. That is the characteristics of an uptrend. A sideways trend, however, doesn't really have a higher high or the higher low. Literally, the highs are equal and the lows are equal. All right. In an uptrend, we have higher highs and higher lows. In the sideways trends, we have highs and lows that are equal. The market is moving sideways. As you can see over here, the market, the highs are equal, the lows are equal. All right. In the downtrend is the opposite of an uptrend. We have highs, we have lows, but we have lower highs. Why do we call it lower highs? It's because as much as it is a high, it is lower than the previous high. So it's called a lower high. And then we have lower lows. Why do we call them lower lows? It's because as much as it is lower than the previous low. All right, that is the characteristics of a downtrend. Do I make sense? And we'll get into more details on that when I teach on market trends and we get into market structure. Does that make sense so far now? You understand the difference between an uptrend, a downtrend, as well as a sideways trend. All right, is that when the market is moving up, it will move in a zigzag movement, and when it goes down, it will also move in a zigzag movement, and it will be creating lows and highs. Right? And how do you tell that it's an uptrend? Is because the highs, they keep on getting higher, and the lows also keep getting higher. In a downtrend, the highs keep getting lower, and the lows keep getting lower as well. All good? Can we move on? Yes, all good. Beautifully explained. Oh, Leandre, you are a wordsmith. I love just how you just use words and you paint a picture with words. I love it. Love it. Love it. You should come write my book. I just love how you play with words. It's beautiful, you know. It's like you're an artist of words. All right, we're good. We can move on. All right. or guys, three phases of the trend. Remember I said this is foundational. Now, as we continue to learn more, you'll understand that there are many things, like we'll have a consolidation phase, we'll have a breakout phase, we'll have or a false breakout phase, some call it. We'll have an impulse phase, we'll have a correction phase. All of those things, they come from this. For now, let's focus mainly on this. We have the accumulation phase, which is where the market accumulates before it takes direction. We have the absorption phase. This is where the market absorbs. And then we have the distribution phase. This is when the market distributes price. All right. And we'll get into more detail when we get into internal and external market structure. But these are the core phases of the market: accumulation, absorption, and distribution. All right. And guys, this is a clear example of what a trend is. You can see that the trend is up. The market is going up. It was low. It went up, created a high, came back down, created a low. But this low is higher than that one. So it's called a higher low. Do you see that? Went up, created another high. This high is higher than that one, so it's called a higher high, and it came back down again to create a low. The low was created, but it's called a higher low because it is higher than the previous low, so forth. All right, so when you are buying in an uptrend, you buy at the lows. Write it in the comment section. Whenever you are buying, you always buy at a low. Why is that? Is because you want to buy at a cheaper price. Think of it this way: you always want to buy at a cheaper price. All right, so you always buy at a low. So you don't just buy at a high. Even though you can see that the market will continue going up, the best place to buy is when the market is at a low. When the market is cheaper, you buy when things are cheap. You know, you always want to buy on Black Friday. All right, you always want to buy on Black Friday because things are cheaper. Whenever you're buying at a low, and whenever you're selling at a high. So think of yourself as a businessman. If you're a businessman and you go and buy stock, you buy for a cheaper price, but you sell at a higher price because you've put a markup. The same applies in trading. If you're buying, buy at a low. If you're selling, sell at a high. You sell at a higher price, you buy at a cheaper price. Does that make sense? Does that make sense? So if you're buying, you buy on Black Friday. Absolutely. So whenever you want to buy in the market, ask yourself, is it Black Friday? All right. Ask yourself, whenever you're buying in the market, is it Black Friday? Buy on discount. Exactly. And remember, I said the market all discounts everything. Our number one principle, core principle of the Dow theory. The market, what does it do? It always discounts everything. All right, so you want to buy at a cheaper price. So whenever you want to buy in the market, ask yourself, is it Black Friday or not? If it's not Black Friday, don't buy. All right, if it's not Black Friday, do not buy. Please call Nulu. All right, are you guys with me? So you sell at a high and you buy at a low. So this is an example. I cannot wait for this lesson. I am in class. Oh, Carol, that's good. We are also in class. Someone sent Carol a hug. Someone sent Carol a hug. Okay. Someone sent Carol a hug.
Hello? Hello? Yes, he's currently hosting a webinar.
All right, are we good?
Can you hear me?
Someone sent Carol a hug, guys. I'm waiting for the hug before we proceed.
So we'll give you a call after it's done.
If you guys are not sending Carol a hug, I'm not continuing. Hi, guys, your hugs.
Access to
All right, let's move on. All right, market trends. As you can see here, this is on a live chart. So we have an uptrend, you have a downtrend, a sideways trend, uptrend, downtrend. You see that? So you sell at a high. You see prices higher, you sell, you make a profit. Price comes higher again, you sell, you make a profit. Price comes higher again, you sell and make a profit. All right, you guys see that? All right, let's move on. Chart patterns. Guys, it's been almost an hour now. Is it fine if we end here for the day, or should we continue? I don't want to bombard you with too much information. I think we can continue with chart patterns we can continue with it as a session on its own. All right. Someone is saying, no, don't go. Cindy, too much information is bad for you. Too much of something is poisonous. You don't know that. Let me give you guys something that will challenge your mind. And I always teach it. For most of you maybe don't know, and because I don't say it, but I am a studier of the human brain. Okay, I study the human brain. All right. So that's something interesting about the human brain. You know that an average human being, and let's run what is this? An experiment. Let's do an experiment right now, okay? And I want to show you guys something very interesting. All right, pay attention, and I want you guys to participate. So, an average human being, okay, please participate. An average human being is exposed to between 20 and 40 million pieces of information on an average day. With all your 5 senses, an average human being is exposed to between 20 and 40 million pieces of information. With your eyes, your ears, your touch, your nose, your feel, 40 million pieces of information. All right, write it in the comment section. Between 20 and 40 pieces of information every single day. All right, every single day, between 20 and 40 million pieces of information. All right, now with that understanding that if you are exposed to 20 and 40, not 20 and 40 pieces, 20 and 40 million pieces, not just 20 and 40, but 20 to 40 million pieces of information every single day. With that understanding, with that information that you have right now, how many pieces of information do you think an average human being can retain in one day? Take a guess. This is the challenge. Let me know, how many pieces of information do you think an average human being can retain in one day? Out of 20 million and 40, between 20 and 40 million, how many do you think an average human being can retain in one day? Let me know. Let's do that challenge. All right, even you guys here in the team, how many pieces of information do you think a human being can retain in one day?
Less than 500.
Eh?
Less than 500.
No, 30, someone says 30 million, some 35. All right, come on guys, how many pieces of information do you think you can retain?
Nothing more than 500.
Someone says nothing more than 500. Someone says 50%. Come on, guys. We retain 10 million. All right. Someone? Kevlin?
I'm not sure.
No, just take a guess. 50%. So 10. Okay. This is going to shock you guys. Out of 20 million pieces of information, an average human being can only handle between 5 and 9 pieces of information. Not 9 million, between 5 and 9, like 1, 2, 3, 4, 5. Out of 20 million, you can only retain between 5 and 9 pieces of information. Right? An average person will retain about 7 on a good day. On a very, very great day, when your energies are up, you can retain 9 pieces of information. If it's just a slow day, maybe about 5 pieces of information. On a terrible, terrible day, maybe about 3 pieces of information out of 20 million. All right. Some of you drove to work today. Some of you drove to your business places, or you took a taxi, an Uber, or whatever means of transport. Do you remember everything you saw on the road? Do you remember? Especially the ones that drive. You know where you stop at a stop sign or at a robot, but you don't recall everything you saw there. You don't remember the car that was on your left. You don't remember the car that was on your right. But your eyes saw them. You received that information. But what your brain does, it's a process we call, my question is, how do you quantify a piece of info? Everything that you can see, you can hear, you can touch, you can smell. Everything that relates to your senses, to your 5 senses. All right? It's sight, it's hearing, it's smelling, it's touch, and what? What's the other one? Feel. All right. So, everything. Like, I'm going to make an example right now. Kevin, you are holding your phone. Don't look at your phone right now. Right?